Welcome to the Malta Financial Services Authority and to this podcast marking 3 years since the launch of our Virtual Financial Assets Framework. We have with us 3 experts who will be talking to us about FinTech, but I'd like to start with our CEO, Gavin, who will be explaining to us exactly what is the MFSA vision on FinTech.
I've recently arrived as the CEO here at the Malta Financial Services Authority, and I've been very impressed by the work undertaken by my FinTech colleagues in terms of putting in place a regulatory framework to regulate the conduct of dealings in virtual financial assets. There's a basic problem or issue that one needs to address. Whether dealings in virtual financial assets ought to be regulated or unregulated. It's very clear to me that all of the problems related to AML, CFT occur in the unregulated environment. And so there is now a growing consensus among leading regulators, including the Bank of England, etc., for the urgent need of the regulation of this space. Malta has been a pioneer in having taken the lead in regulating this class of assets within the European Union.
So Camille, 3 years since the launch of this Virtual Financial Assets Framework. Has it been a busy time? What has the MFSA achieved since then?
Since the launch of the framework, we've registered 23 VFA agents, we've authorized 15 VFA service provider and registered 2 white paper on top of publishing academic paper and taking part of many bilaterals. While being an achievement on its own, we will see pride ourselves knowing the fact that we've achieved this objective following the highest standards, which means that today the sector is built on quality and not quantity.
So, of course, the launch of the VFA framework was not the end of the process. You soon after, in 2019, launched the FinTech strategy. So can you explain a little bit more, Luciano, about this strategy?
The MFSA's vision, the MFSA's FinTech strategy, was basically to establish Malta as an international FinTech hub, which allows and supports FinTech technology-enabled financial innovation within the financial services market, within a regulatory environment which is supported and built on global standards and which contributes to the ultimate sustainability of the financial services market whilst achieving investor protection, market integrity and financial soundness. On that note, the strategy discusses 6 pillars and most notably the 2 main pillars are that of regulations and international links. And on those 2 elements, last year we had launched our FinTech Regulatory Sandbox, and we have also become members within the Global Financial Innovation Network and the European Forum for Innovation Facilitators.
So we've been talking a lot about FinTech, and of course one of the aims of FinTech is innovation through digitalization. But many fear that innovation is actually a disruptor. So how can MFSA make sure that FinTech is a force for good?
I would agree with you that innovation could be a disruptor, but I strongly believe that it's a disruption when it takes you by surprise. So as an authority, we ensure we look out for change. We have to be open to change. And we do this by trying to understand the technology, by trying to understand how these new service providers are using digitalization to offer their services. And this is why, precisely as Luciano has just mentioned, the FinTech strategy foresaw the creation of a sandbox. So through this sandbox, what we do as an authority, we can be open to accept these new service providers so that we can actually interact with them and understand them and look at their technology and the way they're providing services from very, very closely. And by doing so, we can understand the risks, we can understand the benefits, and we ensure that they have the proper controls to mitigate the risks and the benefits are there for the consumers. And in such a way, we protect the investor, we ensure market integrity, and we ensure financial stability.
Herman mentioned the sandbox, but Luciano, perhaps we can talk about that a little bit more. The MFSA has actually received 11 proposals for the sandbox so far. Can you explain what the outcome was of these different applications and at what stage they are?
So the overall outcome was positive. The sandbox, as rightly mentioned by Herman, was established over a year ago. At this point in time, we're trying to, obviously whilst collaborating with the applicants and our current participant, we are trying to operationalize the framework and collaborate with the various functions within the MFSA in order to determine the risks, challenges and regulatory gaps within these innovations to ultimately have and achieve the objective of the sandbox, which is that of fostering sustainable financial innovation through knowledge certainty, to legal certainty and knowledge sharing. On that point, more needs to be done in that the framework, obviously over the past year there were various lessons which we learned, and the framework needs to be enhanced so that we can continue offering a sandbox which is relevant and which takes into consideration the developments within the European and global fora.
Well, I'm glad that you mentioned the EU because, of course, the MFSA is not doing this in isolation. The European Commission launched its digital finance package in September 2020. This includes legislative proposals for crypto assets and digital resilience. Now, the MFSA has actually set up a working group internally specifically to address the implementation of this particular package. So, what is the MFSA's contribution, if any, in this respect, and what are the challenges ahead, Luciano?
As you rightly mentioned, we have established an internal working group specifically mandated to address the policy initiatives proposed by the European Commission. The mandate is simple, it's that of implementing the package in a holistic manner which addresses the needs of the Maltese financial services market. We have been contributing towards this package since its very inception. Indeed, we had proposed our recommendations during the consultation period, and we are pleased to know that most of our proposals were also taken on board. Our proposals mainly related to that of removing fragmentation within the European digital market, of adopting a European framework which facilitates digital innovation, of promoting data-driven finance and data mobility across the European Union, as well as a package which addresses the challenges and risks that come with digital transformation. On that note, the challenges ahead are several, and however, we are very pleased that the proposal picks up on what the MFSA and what Malta has done within the VFAs, within the virtual financial assets space, in that it proposes the markets in crypto assets framework, as well as it is very aligned to the MFSA's vision, which was stated in the MFSA's FinTech strategy. That said, we need, in order to address the challenges of this package, we need to come together as MFSA and all various stakeholders within the market in order to understand the needs of the market, as well as to adopt the package in a manner which promotes to fostering financial innovation within Malta and the European member states. Therefore, it's imperative to better understand the needs of the Maltese financial services market and to hold meaningful discussions with all the relevant stakeholders so that we can adopt a package which looks towards the future of financial services.
The CEO, I think, encapsulated it very well in his introduction when he said it's all about regulate or not regulate. But crypto assets were actually specifically created as a way to avoid centralized control and regulation. So we've now got the European Commission, which is proposing a bespoke regime, which will impose safeguards such as capital requirements, custody of assets, a complaints procedure, and investor rights against the issuer. But are we just playing whack-a-mole? I mean, aren't the people who want to stay outside regulation always going to keep one step ahead? Camille?
While it is agreed that crypto assets were created to avoid centralized control, it's also important to ensure that crypto assets are not misused for illicit activity, and it's very important to protect the public from bad actors. Therefore, there's always an introduction of safeguards that become necessary, and this is where regulation steps in to protect investors and ensure market integrity and financial soundness. And the proposal from the EU Commission does exactly that. It brings legal certainty to the crypto space, and it adopts regulatory principles which are borrowed from traditional financial services, having service providers that are fit and proper, having appropriate governance structures, being financially sound, being subject to strong AML/CFT control, having strong custodial controls, having robust cyber resilience. So while it imposes some structure around crypto assets, it does not depart from the innovation that the assets bring. It's just a necessary control to be able to enjoy or benefit from this innovation. So we see that as a massive added value.
Herman, of course, it's been 3 years, and one of the most significant developments since then has been the COVID-19 pandemic. This has actually forced people to interact very differently with financial services. Is this a positive one from the MFSA point of view, and is it one which can be sustained, that we even want to sustain?
COVID did change many things. It changed our lives, really. It changes the way we interact with each other. It changes the way we shop, the way we order our food, the way we pay for things. And in fact, it was quite interesting, something to see that Malta has been affected dramatically with COVID, especially in the way people pay. 1 year ago, Malta was basically a intensely cash-based society. What we've seen over the last few months is this amazing take-up of digital ways of paying, whether it's through contactless, whether it's mobile to mobile, whether it's online payment. Because the way we're doing our shopping now, people are used to paying online. And this has obviously affected also the way people interact with the banks. They do online banking. Now, although this is not highly innovative in the FinTech kind of way, it for sure augurs well for Maltese society, because it shows that the Maltese people are actually open to changing their habits. And we've seen the past few months that habits are changing. Habits of merchants are changing. They are more prone to accepting digital payments now. And I think that is very, very important, because taking this in the bigger scope of things, I think these new habits that Maltese society has formed will actually make them more open to accept and take on innovative products which are more digitized in the financial services.
Well, we've spoken a lot about regulation, but any framework is only going to be as good as its external boundaries. Now, the EU, at the end of the day, has to compete against other jurisdictions which might have less robust supervision. So why would a stakeholder opt for higher regulation and supervision, given the time and financial resources that this entails? Camille?
While some element of regulatory arbitrage are always bound to happen, regardless the sector. However, what we're currently seeing is a certain degree of harmonization at a, at a global level, and we're seeing that being driven by global standard setters like FATF, IMF. So we strongly believe that this initial investment and making the choice, a conscious choice of going through a regulated route will have long-term benefits to all stakeholders, because this is the way to grow the sector in a sustainable manner.
So, to conclude, we've talked about the framework and we've talked about the strategy, but what about tomorrow? Herman, explain to us a little bit about what the MFSA is doing to be prepared.
Well, as mentioned by my colleagues previously, our vision is to follow global practices, to watch closely developments, and work towards establishing Malta as an international FinTech hub, which supports technology-related financial institutions, and we can provide sustainable growth in financial services. What we've been trying to do, and what we will keep on doing, is built on 3 foundational elements, namely looking at regulation, monitoring and capacity. If you allow me, I'll just go through quickly some ideas that we have on these 3 elements. With regulation, for sure, we need to watch closely what the European Union is coming up with in the digital finance package. This will affect everything that happens in financial services. We need to also collaborate with our international partners and participate in the forums that we already are members with. For sure, we also need to review our sandbox framework. Although it is only 1 year old, we realize that there are some tweaks that we need to do to make it more available and open to fintech suppliers. From the monitoring perspective, for sure, we need to watch the space. It's changing very, very fast, so we really need to be on it. We need to understand how the Maltese financial services are actually taking on board fintech, what they think the risks are, what the opportunities are, so that we can help them and set the scene for such adoption. We need to participate with cross-border testing frameworks that our international colleagues are coming up with, and we need to build fintech bridges. Lastly, it's about capacity. We need to enhance our supervisory and regulatory capacity. We need to integrate fintech within our structures, within our processes. We need to enhance capacity through recruitment, through training, and through exposure to technology-enabled financial services.
Thank you so much for being with us today. As you can see, we've got an awful lot already going on here at the MFSA, and there's an awful lot more yet to come. Please do follow us on our website, where you will find the latest news from the MFSA.